Who are the best investors in the world? When you're talking about the Mount Rushmore of investors, certain names are just going to pop up time and time again. Warren Buffett is usually the first that comes to mind. The man from Omaha started buying stocks when he was just 11 years old and filed his first tax return at 13, deducting his bike as a work expense. He's known for his value investing approach and long-term outlook, which has allowed his company, Berkshire Hathaway, to see insane returns on investments like Coca-Cola, American Express, and Geico. Then you have the likes of Peter Lynch, who ran the Magellan Fund at Fidelity. Between 1977 and 1990, he averaged a 29.2% annual return, more than double the S&P 500 during that time frame. He's big on the idea of buy what you know, which basically means if you're using a product and love it, chances are others do too, and that could be an indicator of a strong company worth investing in. Let's also not forget Ray Dalio, founder of the hedge fund Bridgewater Associates. Dalio's claim to fame comes from his principles-based approach to life and investment, as well as his all-weather strategy that aims to produce steady returns regardless of how the markets are doing. His firm's biggest fund, the Pure Alpha Fund, has racked up annualized gains of about 12% since 1991. Why are they so good at investing? These folks aren't just lucky, they're good, incredibly good. They're disciplined, they do their homework, and they stick to their principles. Buffett, for instance, looks for companies with what he calls a moat, an advantage over the competitors that's sustainable over the long term. He's patient, he waits for the right price, and he's not swayed by market trends. Lynch, on the other hand, taught investors to keep an eye on the price-to-earnings growth ratio to find undervalued stocks. He has an uncanny ability to understand the consumer sector and can spot growth before it becomes obvious to the market. Dalio runs on transparency and radical truth. His firm culture involves brutally honest feedback sessions. This mentality extends to their investment strategies, rigorous testing against historical data to ensure they can survive whatever economic conditions come along. Their success demonstrates that investing isn't about pulling the lever on a slot machine. It's about strategy, patience, and a bit of informed intuition. Living in Portland, Oregon, I sometimes think about these investors as I walk through the lush parks or sip coffee at a local cafe. I muse on how the analysis and patience in investing seem akin to the careful nurturing required in our abundant gardens or the roasting of our celebrated beans. Moral of the story? If you're looking to learn from the best, study these giants of the investment world. And remember, it's not just about making millions. It's also about the approach, consistency, and the long game. Much like the evergreens of the Pacific Northwest, the best investments often require time to grow and flourish.